After months of relentless momentum since November of 2023, the market is now consolidating into what appears to be an ascending triangle. There have been failed breakouts or breakdowns, month or week or day. I had this all prepared. It was going to be dramatic. What I'm trying to say is that a breakout appears to be imminent, and we'll talk about that in a little bit. And this is the 0DTE morning market analysis. It is Thursday, February 20th, and here we go. First thing we're going to be looking at is the charts. Let's go to the charts. All right. So we're continuing on in Zombieland. I don't need to go into the characterization of that. That essentially means that we're in a low volatility regime, and that affects how we approach the market. Because when there's low volatility, there's an accelerated premium decay. We look for much narrower positioning because there's more risk actually in low volatility from an option trader's point of view, because there's less meat on the bone, less profit potential, and there's higher gamma risk or sensitivity to price movement. So we naturally have to bring it down a bit. We still trade our hallmark asymmetric trade, very small risk, large potential reward. There could be that breakout coming anytime now. But, that is my prognostication, my proclamation that it seems that a breakout is imminent, and we're right now coming up with the culmination of a pretty long or well-established descending triangle. And let me just sort of demonstrate that right now. That's what we're seeing right here. And you can see since November of 2023, really, it actually even goes beyond that. I mean, you could make the argument that it actually started back in, I don't know, well, October? Yeah. So there's our ascending triangle. We're coiled like a snake. Every breakdown has been thwarted. And we're just right near the end of that. Once we get to this apex, it'll do something like this. Failed attempt 1. Let's try that again. It'll go like this. Yeah, and then up. Man. There you go. I don't know if you can see that. Here, I'll make it bigger. There it is. That was horrible, Ernie. All right, let's try that one more time. I've got to illustrate this. It comes right to a point and then out. Now, is it going to be today? Are we going to have another pullback? At one point, we're going to break this neckline up here, and the long bullish trend will resume. Or it might do this. I don't think so, though. That certainly hasn't been the pattern. There would have to be some monumentally bad news for that to happen, to have that kind of breakdown. But that's what I see coming. Anyways, let's get back to the 0DTE analysis. We're going to look at volatility. We're narrow. Yep, I don't have the big ass fly up, so I'm very well prepared this morning, but I know that we have unemployment reports coming out this morning, so I would imagine that there is an opportunity this morning, but I have not looked at it, so that's because I got up late. I had to squeeze in my morning routine, my workout and all that, and sorry, something has to suffer. But anyways, there is unemployment report coming out at 8:30, which will be in about 40 minutes. I would expect that volatility will rise slightly into that report. A lot of people are really looking at that closely because unemployment or employment has been coming under pressure. A lot of people are finding that it's hard to find a job right now. And particularly with all these big layoffs coming in government, we have a lot more people coming onto the marketplace, although I think most of them have gotten some sort of severance. And not that, I don't know, are they prepared to go into the private sector now? That's a good question. Anyways, back to lots of things to ponder. So what's our directional bias? Our directional bias is up. We're well above the moving average. So we're going to do call flies, narrow call flies. And then the next step is to look at market structure. Market structure is our analysis of the volume profile showing where there are going to be support and resistance levels. And you can see these past 2 days of trading, we've hit these levels very accurately. The vertical lines are the morning session. So this is a 5-minute chart. So you can see on Tuesday, we came down right to one of these levels. See, I have the little pad drawn. And then we would take a bullish position, in this case, above, and it moved up into it. Of course, it broke down and failed, and then eventually came right back up and turned out to be an incredibly good trade. And yesterday was a similar act. It came down to the exact same place, found support right there, and moved right up into another good bullish trade. And so today, I don't know, is today going to be any different? The only difference, I think, may be where we find support before we have that entry event. And I'm suspecting it's going to be at the top of this volume node. I can tell it's a volume node because of the way the color scheme that I have here. Red is the top of nodes, green is the bottom of nodes. And so this area is a volume well. There is another node further up here where we found some resistance on our breakout. So like I said, we're gonna, if you were to zoom out, this is our move, right? We're doing this thing, slowly consolidating, something like that. Now, like I said, I don't know if it's going to be today, tomorrow, the next day, who knows? But it looks like that pattern is continuing. All right. So what else do we have to show you? We have that. Okay. I think that's the whole story. Back to the big head. Yeah, I got to stop staying up so late working on stuff and getting not the required sleep and coming in here late. So I apologize not having everything prepared. However, it's pretty much the same story as yesterday. We're kind of in this holding pattern, still playing the strategy, putting on asymmetric, out-of-the-money butterflies, trying to gather or capture that both price movement, because it's a directional trade, as well as premium collection. So the past 2 days have been pretty successful. I had a couple of very good trades yesterday, one including something that we call the mother of all flies. And I'm actually developing an analyzer that will be able to detect these types of situations. We call it an edge case strategy, but what happens is that often, particularly when there's low volatility and low liquidity like this, there are mispricings in the options chain. And what happens then is that you can find very, very large butterflies every once in a while, just at the right time and in the right spot, that you can get extreme asymmetry, where normally we're going for about 10% debit of the width of the fly. You might find that it's as little as, I don't know, a 7 or 6%. So you can, instead of paying, say, for a 50 wide fly, paying $500, which would be 10% of the width, or $5, you might get it for $3 or even less, $2.75, right? All because there will be some temporary mispricing of an option chain. And so we look for that. It's kind of a tedious process. And again, this is a strategy that's in development, but we've all found some incredible fortune with it. And you don't have to have much of a move into your fly. The analyzer that I'm doing will have real-time ingestion of the options chain and then analyzing it from a vector analysis point of view, looking for these opportunities. So that's coming soon. I don't know if I'm going to make that something that I will do publicly. Probably not. It's going to be for my academy and also my coaching service. So it might turn into a tool. We'll see. Anyways, that's pretty much it. Giving you a preview of what's coming. If you want to learn more about this strategy, go down below, click the link for the 0DTE Academy, full course telling all about our strategy, our methods, our process, how we come up with these edge cases and develop those strategies. Everything is in there in the course, plus there's 2 coaching calls every week for a low price of only $35 a month. Go check that out. And we shall see you next time. Coach Ernie, out.